Hello my dear students. This is our third tutorial of International Accounting. In the last tutorial, we have discussed about International Accounting Harmonization. Following to that, in this tutorial, we are going to talk about the major harmonization effort has been undertaken by a number of global organizations. Under this lesson, we are going to discuss about the major players who contribute to the international accounting harmonization and their role. In addition to that, we are going to discuss about the success and failure of International Accounting Standard Committee and the International Accounting Standard Board. And finally, we are going to discuss the arguments against harmonization. Let's move on to the lessons. Major players. Although there are a number of organizations contributes towards accounting harmonization around the world, there are 6 major organizations which contribute a lot towards accounting harmonization. Let's see what are those. The first one is International Accounting Standard Board, which is the successor of International Accounting Standard Committee and the commissions of the European Union. And the third one, the International Organization of the Capital Market Commissions and International Federation of Accountants. The next one, the United Nations. And finally, OECD, Organization of Economic Cooperations and Development. Let's talk about one by one. The first organization is International Federation of Accountants. This is an organization which includes accounting professionals all over the world in order to discuss and generate high-quality accounting standards. Globally, this organization has more than 175 members from more than 130 countries. Moreover, there are nearly 3 million of accounting professionals who work together with this organization in order to discuss and develop high-quality accounting standards. The mission of this organization is to serve the public interest and to strengthen the worldwide accounting professions and contribute to the development of strong international economies by establishing and promoting high-quality professional standards on auditing, ethics, education and training. The second organization we are going to talk about, International Organization of Securities Commissions. This is a global leading organization for security regulators and which has 177 members from more than 100 countries. This organization recognized as global standard setter for the security sector. This organization requires its members to adopt high-quality accounting standards. This is because the stock exchange all over the world may require different level of adaptation of accounting standards and the financial information from the listed company. Therefore, the multinational company would like to list their shares where the requirements of stock exchange is low. This may adversely affect the world capital markets. In order to reduce these issues, IASC or International Organization of Securities Commissions develops, implements and promotes to internationally recognized standards for security regulators. These organizations also help to cross-border securities offering and listing by multinational companies. So the multinational companies, they can list their stocks or more than one country without restate their financial statements since all the countries require the same standard, same accounting standards. In addition to that, this organization advocated for the development and the adoption of high-quality single set of accounting standards all over the world. Therefore, as a summary, International Organization of Securities Commissions facilitate to harmonize among international securities regulators. However, there are only 100 countries as the member of this organization. The third organization is the European Union. This organization regulates its members, especially from the European region of the world. Their objective is to establish the free movement of persons, goods and services and capital throughout the Europe. And the second objective is to create a unified business environment, including the harmonization of company laws and regulations, taxation, and the creation of a common capital market. In order to create a common capital market to all the members' countries, initially this union developed the directives and regulations in order to provide a common accounting standards. However, later the European Union stopped their preparation of accounting standards and it requires its members to adopt and use internationally financial reporting standard in order to do their financial reporting work. However, the European Union faced so many obstacles to harmonize all their members towards common accounting standard. The reason is, within the region, there are different systems developed and followed by the countries. For example, some countries followed the traditional Franco-German system and other countries they followed the Anglo-Dutch system. There are huge deviation between these two traditional systems. Therefore, creating a harmonization among all the countries is not simple to this European Union. However, this European Union tried to harmonize their companies through directives and regulations. The directives in the sense, there are some directives provided by the European Union, but each member country should adapt them into their legislations. And the term regulations in the sense, there is a common regulation to all the members instead of creating new regulations to each nation. Moving forward, the next organization is the International Accounting Standard Committee. Initially, this committee developed by 8 countries all over the world in order to harmonize the differences among them. However, later on, the vision of this committee moved towards the global harmonization of accounting standard. The purpose of this organization is to formulate and publish in the public interest accounting standards to be observed in the presentation of financial statement and to promote their worldwide acceptance and observance. Simply we can say their purpose is publishing accounting standard and the second one is promoting their accounting standard all over the world. Within this committee, there are more than 100 countries accounting body are being as member. And this organization create number of standards successfully. However, this International Accounting Standard Committee don't have any enforcement power all over the world. They can develop and provide the international accounting standard, but they cannot regulate the companies or the countries whether they are following or adopting international accounting standards. Move on. The next organization is International Accounting Standard Board, which is the successor of International Accounting Standard Committee. The objective of the organization, in addition to the IASC, is to work generally for the improvement and harmonization of regulations, accounting standards and procedures relating to the presentation of financial statement. In addition to that, this organization goal is achieving comparability for investors while reducing the cost for multinational enterprises to prepare multiple financial reports. Therefore, this International Accounting Standard Board contribute a lot towards the harmonization of international accounting standards. In line with these, IASB provides the framework for the accounting preparations. Without conceptual framework, the development of systematic accounting standard is questionable. The objective of the framework is to establish the concept underlying the preparation of financial statement based on the International Financial Reporting Standard. These framework includes the following. The first one, objectives of financial statement and underlying assumption. Based on the IFRS, the objective of financial statement is providing informations for the useful economic decision making. And the second one is qualitative characteristics that affect the usefulness of financial statements. IFRS identified 4 qualitative characteristics. Those are understandability, relevance, reliability, and comparability. And the third one, under the framework, IFRS provide the definition, recognition, and the measurement of the financial statement elements. For example, it provides the definition for the assets. And the fourth one, concept of capital and capital maintenance. So these framework describe the concept of capital maintenance. For example, it describes about financial capital maintenance and the physical capital maintenance, and it says about measuring these capital and assets in the different bases. For example, based on the historical cost or the current cost. Moving forward, we will talk about the major players jump on International Accounting Standard Boards. In 1998, Germany allows its companies to prepare their consolidated statements based on the IFRS. Later, in 2000, International Organization for Securities Commission recommends and accepts 30 IAS International Accounting Standards for cross-border listing. And again, in 2005, European Union requires their members to adopt International Financial Reporting Standards. Next, we will talk about the convergence effort of International Accounting Standard Board. The first effort is No Work Agreement. In 2002, International Accounting Standard Board joined with Financial Accounting Standard Board, and these two organizations work toward the accounting standard convergence. As the results, they initially have done a joint project in order to identify the major issues in the accounting. In addition to that, they had a short-term convergence to remove the differences between International Financial Reporting Standard and US generally accepted accounting principles. So far, we have discussed the contribution of international organization towards accounting standards. Based on that, can we say whether these international harmonization of accounting standard achieved? Or can we say, has the International Accounting Standard Committee and the board been successful? The answer is no. Let's see why. There are some pictures to you. So this picture explains the adaptation of international financial reporting standards all over the world. In this first picture, it shows IFRS standards are required for domestic public companies. So in the blue lines, we can see these countries are record these domestic public companies, and the white region shows the countries which is not record the IFRS for their domestic public companies. And the second picture, it shows IFRS standards are permitted but not record to domestic public companies. Move on. This third picture shows IFRS standards are record or permitted for listing by foreign companies. And finally, this overall view of the world shows the countries that require or permit IFRS or have fixed dates for adaptation. So the yellow color shows the countries which is not adapted the IFRS yet. So simply we can understand from the picture, international financial reporting standards are still not accepted by so many countries over the world. Therefore, from that we can understand some countries, they are using their own national standard instead of international standard. Therefore, we can say harmonization of accounting standard has not achieved yet. More than that, when we talk about the success of International Accounting Standard Committee, the first thing is the publishing and promoting of accounting standard has been positive. This organization published so many accounting standards, they solved so many accounting issues all over the world. But the questionable part is implementation. Since IASC don't have any enforcement authority, they can't push the countries to adapt these standards. Therefore, they cannot confirm the adaptation or the implementation of international accounting standard all over the world. In addition to that, the another problem is options. International financial reporting standards provide so many alternatives to the followers. For example, that we have already discussed, if we take the inventories, companies which follows international financial reporting standards can apply the FIFO, first in, first out, or else the vegeted average in order to measure their inventory values. So these alternatives also reduce the chances for the accounting harmonization or the accounting convergence all over the world. In addition to these issues, the successful implementation of IFRS depends on which type of country. For example, there are some developing country and developed country. These IFRS initially created based on the developed country. Therefore, following the IFRS is difficult to the developing country. However, 3 developing countries in the world, those are Nigeria, Malaysia and Singapore, adopt this international financial reporting standard. The second thing is emerging countries. Like developing countries, adaptation of the IFRS to the emerging countries also difficult. However, the Eastern Europe, which follow the IFRS. And the third one, the conventional Western Europe and Japan. These are the special region that shows resistant to the IFRS initially. However, later it overcome as IFRS really become international. Therefore, part of some regulation or allowed in France and Japan, etc. For example, Japan requires the IFRS, the companies who cross-listed their stocks. And the last one, the capital market countries. So capital market countries in the sense where the capital market is strong and the number of other countries listed on the capital market of such countries. For example, US, UK. In those countries' capital market, other companies and multinational companies wish to list their stocks. Therefore, these capital market countries should follow international financial reporting standard in order to encourage the listing of multinational companies. So far we have talked about the major effort undertaken by number of international bodies as well as success and failure of International Accounting Standard Committee and International Accounting Standard Boards. So, if there is a failure in the achievement of international harmonization, then what is the next stage? So here I am asking a question, what are the appropriate standards for each country? Whether the country can they follow their own national standard or else they need to follow the International Accounting Standard. These questions has not answered yet. However, there are some controversy against the utility and usefulness of harmonization. Some people say having a worldwide single set of accounting standard is better for facilitate the global trading and encouraging the international capital market and for the staff deployment. But others said each country should have their own standards in order to facilitate to their own environment. The reason is each country differ from others. Their environments, rules, regulation and cultures influence on the accounting standard. Therefore, there are some positive and negative arguments relating to harmonization of international accounting standard. So, what is the solution? Some researchers say the countries can have dual standards instead of single. However, if they have dual standard, they do not need to apply to all firms like the groups, multinational and the listed firms. But the issue is still continuing. Let's talk about the arguments against harmonization or convergence. Although we are talking, the harmonization of accounting standard is vital to the entire world. There are some arguments against that. The reason is, the first one, every nation follow their own tax system. Therefore, there's a huge deviations among them. So using the international accounting standard in order to prepare the tax account is not perfect. The second one, the some IFRS, for example, those related to financial instruments and those related to fair value accounting are controversial. And the third one, there are inadequate guidance to the first-time actors. Without proper guidance about how to adapt international financial reporting standard, the successful adaptation is questionable. And the next one, in some countries where the capital market is not developed and the users of financial statements satisfied with national standard, where the adaptation of international financial reporting standard would be little benefit or else no benefit. And the final argument is the language difficulties. If the organization wish to adapt IFRS, then they have to translate their financial reports to the common business language, that is English. This is a major issue to the countries which is not speaking English at all. So, in this tutorial, we talked about the international harmonization effort undertaken by different organizations and their roles. And then we discussed about success of International Accounting Standard Committee, and finally we discussed about arguments against harmonization. Dear students, I hope you have understood the lessons that we discussed today. If you have any questions or clarification, please comment me below. Dear viewers, if you like my videos, please share it with your friends and subscribe my channel. Finally, press the bell button. Thank you for watching. Bye-bye.